What's good, YouTube? Welcome back, guys. Zeb Monopolies here. Today we have a whiteboard lesson. It's been a while and I'm gonna give you the realistic expectations when it comes to trading. I was looking at my trading results from October 2023 till today, and there was some trades that I could have really made almost 100% on, but instead I opted in for 10 to 15% return instead. And I'm thinking, should I have held those positions? And what if it's somebody out there who doesn't have the experience that I have? So I want to share my experience with you guys and talk about expectations when it comes to trading, because expectations really is the differentiating factor between those who get to make it successfully and those who don't. Because a lot of people have different wild dreams when it comes to trading, and sometimes those wild dreams are good because it means you're greedy, and greed is actually okay. But as you cross the line of too much greed, that's when it becomes not okay, and that's when you start being a loser. So we're going to talk about swing trading and day trading. So let us begin. But before we begin, make sure to smash that like button if you enjoy these whiteboard lessons. So swing trading, guys, our job here, and by the way, when we speak about swing trading, most people don't like swing trading because they think they don't make enough. Well, here is MSTR, a trade I had from October. I think it was one day trade. We pulled 13,000. Now, of course, we've made a lot more trades since then, but it's just something that I wanted to just share with you, because MSTR has run up by 400% since I closed my position. So, should I have held for a 400% return if I was swing trading? Well, let's talk about MSTR. My actual position was 95K. That's how much I put in. 95K, okay? That's my capital. I ended up with 13,500 profit. Now, today, if I was to sell it at the current price of 1,600 when I'm making this video, it would be roughly, I believe, 350K profit. But instead I took 13K. Now, the truth is, did I know that it was gonna go to 400% return? No, nobody knows. Nobody knows something is going to do a certain thing. What we know is a move is about to happen. Maybe a move is gonna happen by 10% or 20%, but we didn't know it was gonna go for 400%. Maybe you believed in it. Maybe there's somebody who's just crazy. Maybe the CEO is hyping you up to tell you to stay in it. But in most cases, that ends up being a dud. That means if you had held, maybe you don't even take the profit, maybe you end up losing. And that's something you'll see time and time again in the market. So, did I get greedy in this trade and I took 13,500? No, I didn't. So that's a successful trade. But those who did get greedy and ended up holding, that's also a successful trade. But those people have a high risk tolerance, which is something most of you don't have, because those people would have money in their bank account. This is money that they're using, they don't really care about. Okay, so when somebody sees 13,000 and they've only started investing, that's a huge number for them. They can buy a brand new car. So again, what we just did here, we put a lot of money to make 13,000. We put 95,000 to put 13,000. That was a good trade. But it could have been amazing if we made 350. But I didn't go for that. Why? Well, because I understand getting too greedy can be detrimental, because I have that experience. So what is realistic expectations when it comes to swing trading? 10% to 20%. That's realistic. Okay, as a swing trader who flips every 2 to 3 months, if you adapt or use the same strategy I use of rotating your positions every 3 months, then 10 to 20% is great. And in some cases, if the market is hot, you're making that in 1 month or even less, even in a day. It depends which stock you're going for. So let's talk about day trading. Now, day trading really, by the way, this 10 to 20% return is per position. It's not overall capital. Okay? So you could be making maybe 20% every 2 months if you're rotating your overall portfolio every 2 months. And by portfolio, I mean your 4 trades that you have open. I'm not talking to investors, I'm talking about swing traders here. So let's talk day trading. Day trading, guys. you are not starting with 95K most likely, because if you had that money, you wouldn't be day trading, you would just go to swing trading. But day trading, let's say you have 10,000, maybe less, 10,000 and less. Well, you're going to be using all of it. And what are you really hoping to make here? You're hoping to make at least 5% a day, especially if you end up using leverage. Is 5% a day realistic? Well, yes, but you're not going to make 5% a day. You'll probably maybe make 2% a day, okay? And on the good days, you make 5%. On the bad days, you're giving back 5 to 2%. So overall, what's the realistic expectations when it comes to day trading? A good day trader who knows the market's ins and outs and what's happening. Well, this 10,000 can actually be sitting at 15K to 20K in maybe 2 months' time. Now, that's almost double your initial capital. Well, you're using leverage, I assume, okay? You're probably going to be using leverage. And if you're not using leverage, then maybe you're sitting at $1,000 or $12,000, so $2,000 profit on your 10,000 initial investment. That's about 20% return. And that's only because, guys, you know, nobody actually knows the markets inside out in the first 2 years. You think it's that easy just looking at it, but it's not. It's not going to be as easy. You're going to make money, but eventually you'll just give it back the more you try and keep going. Unlike swing trading, you're not really selling unless you're making a profit. But here you're forced to take a loss because you have risk management. And sometimes if your risk management is off, you're actually just losing without making, because you keep getting stopped out. And that's the negative aspects of day trading. Well, say swing trading is a different ball game. Okay, yes, you do take losses, but maybe you take one loss out of 20 trades. That's assume you enter a bad trade or a penny stock that's not making you comfortable, and you just want to get out from it. So, realistically speaking, guys, you're making 10 to 20% swing trading every rotation. 2 months to 3 months rotation. Day trading, maybe you're making the 20% in a month. But there's a huge risk involved here, because you could be minus 20% because of the stop losses and the potential losses you're going to be taking, which you don't really have that here. Okay, so I understand, guys, this might seem like something some people can do better than that, and I've done better than that day trading. I've turned 1,000 into 3,000. That's 200% return. But it's leverage, so the risk has increased now. And if you are trading with leverage, then you can actually basically go for larger returns. But just remember, when you go for larger returns, then you've entered extreme greed. And extreme greed is usually detrimental. That's where you end up getting destroyed. So make sure not to fall into that trap of extreme greed, and try just to be greedy. Greedy to a point of uncomfortable, yet not overly uncomfortable. And that's the sweet spot. That's me done, guys. See you soon. Appreciate you for watching. If you want more of these whiteboard lessons, smash that like button. And as always, drop a comment below. Bye.